Good day, ladies and gents. How are we all doing? We are back on our book, Market Structure and Powerful Setups by WadeFX Setup. Shout out to Wade for giving us the opportunity of going through his book. Great material, great content. So today we are on chapter 5, where we are going to be speaking on the daily range price action. And it's mainly about sessions, Asian session, London session, New York session, accumulation, manipulation, and distribution, which is abbreviated by AMD. All right, so without wasting much time, let's quickly jump to chapter 5. Those who want to follow Wade, I'll drop his link in the description so that you guys can get in touch with him if you need, excuse me, first-hand information on this. Then those who want to join my community, you can opt for the free community, you can opt for the paid community. It's all up to you. All right, so getting started, chapter 5, daily range price action. So the daily range is defined by the open price, the low of the day, the high of the day, and the closing price. So I think as a trader, this is actually one of the basic concepts which some people actually overlook. You need to know how your candlestick forms, right? You need to know how your candlestick forms. So what we're simply trying to say on this particular topic is, all right, so when this is your normal candlestick, right? This is your normal candlestick. So if your candle opens on the bottom and closes on the top, automatically it's a bullish candle. That's the first thing. The second thing is, for every candle which opens, it's going to set a low price and it's going to set a high price. So you identify four things, just like the author said. The first thing on every candlestick which forms, the first thing is you need to identify your open price, which is mainly here. This is your open price where your candlestick body opens. So this is a bar candlestick. I'll show you when we get on the charts. All right, so this is a bar candlestick, not a candlestick. This is a bar chart. This is a candle chart. Then we also have our line chart. Okay, let's remove this. So we've got three types of charts: a candlestick chart, a bar chart, and a line chart. So this is taken off the bar chart, and this is your normal candle, which you're used to. So you have to identify where your candlestick opens, where your candlestick closes. If it closes above, it's a bullish candle. If the close is below, it's a bearish candle. You have to identify the highest point of that candlestick and the lowest point. So your candlestick will be like this. So your open price, lowest price, closing price, and the highest price, just like that. So this sort of helps you to take your trades, especially if you can figure out like your directional bias, especially on a higher time frame. But we're going to touch more on this as we proceed with this chapter so that you don't get too confused. So on a bullish day, just like what the author is saying, your open price will be on the bottom, closing price will be on the top. On a bearish day, so we're assuming this is a daily bar, this is a daily candle. So on a bearish day, your open price will be on the top and your closing price will be on the bottom, right? So in other words, this candle will be looking something like this. That's your selling candle. That's your buying candle. This is going to be green. This is going to be red, just like your default buying and selling colors. All right, so sessions. The daily range is defined by three important sessions, which are the Asian session, the London session, the New York session. While it's your sessions, I believe as a trader, you need to find yourself. You need to check with your own self, with the inner you, figure out which session works best for you. You can also consider the time zone which you're in. So for those on the Southern Hemisphere, or for most African traders, I think we are lucky because we can trade Both these sessions, they usually happen in the daytime, just depending with your time zone. Both of these happen during our daytime. Land Asian session, that's when it's evening. So figure out which session you'd like, or which session works for you, depending with your schedule, depending with your time zone, and things like that. So the Asian session is characterized by being a consolidation of usually 20 to 40 pips due to lack of liquidity in the market. Delimitation. The session starts from 2 a.m. until 8 a.m. UTC plus 2. So again, from an illustration perspective, if you just want to have a clear view of the sessions, your best time frame, just like the author is showing us, would be the 15-minute time frame, right? So you have your period separator on your charts separating the days, which means this is 24 hours. That's one day, right? So if our price is going to open, let's use black. If our price opened right here, that will be our open price. Remember, on the daily candle, that's the open price. This is the highest price. So we've got the open price, the highest price. This is the lowest price, and this is the closing price right here. So already you have a view of how your daily candle is looking like. So all this will come together when we combine all the information which the author has for us. But anyways, coming back to the Asian session, usually the Asian session, like the author said, there is no volume in the markets. So the range is usually tight, as you see here. The range is usually tight. So you can just mark it based on your time zones. I won't really speak much on the Asian session based on my own trading style because I prefer trading the London and the New York. But just know the Asian session, usually there is less volume. So it's not really like a good session to trade unless maybe you're trading JPY pairs, and yeah, you might get some volume. So this is an illustration of the Asian range. Again, from like a bigger chart, you can see we've got 1, 2, 3, 4 days. So we've got our Asian session here, Asian session there, Asian session here, Asian session here. From all these 4 days, you can see during the Asian session, we did not have much volume. So price usually, most of the times, or let me say 70 to 80% of the times, Asian session usually consolidates. That's where your price will be consolidating. So if you are a day trader, I will just advise you to have period separators on your charts so that you can separate the days. It's pretty much easier to read the price action during 24 hours if you've got your period separators on your charts. Then the next session we have is the London session, which is characterized by making the low of the day, the LOD, or the high of the day, the HOD. It can be used to take traders to the opposite side of the true direction of the day because of liquidity. Remember when we went through liquidity? Okay, just a moment, guys. Let me update this. Yeah, all right, sorry about that. So the London session is characterized by making the low of the day and the high of the day. It can be used by traders it can be used to take traders to the opposite side of the true direction of the day because of liquidity. So remember, we went through the chapter of liquidity. I hope you guys now understand it. So this is where things start to work hand in hand. This is where we start having confluences, right? So delimitation, not the whole London session needs attention. Focus on the first 2 to 3 hours at the beginning of the session from 9 until 11 or 12 UTC plus 2. So just to clarify this before we proceed, this is actually also my personal trading time. Soon as my London session opens, I've got a 3 hour trading window where I'm supposed to get a good setup. If there is no setup for me, usually I'll simply take time off, then I'll come back for the New York session. So the most important part of the London session, if you're trading London session, 2 to 3 hours, I agree with the author here. That's the best sweet spot for getting the best setups. So London Open illustration, this is GBP USD M15 chart. You can see we had a nice Asian range right here, which was tight. Then we had our London session opening and we created this for high, and we also had this lovely liquidity sweep. We also had a BMS, which is a break of structure. We also had a retracement, which means you can now run your fibs. So if you are following this book from chapter 1, you can now see, you can literally put everything together already, and you can come up with a setup just based off what we learned. You've got a consolidation, you get a liquidity sweep. We also have like an order block here, which is also retested. So it just depends. You can use order blocks, you can use fib retracements. If you can identify a break of market structure, if you can identify a trend, it's easy to use a fib tool from point A to point B. Then you just wait for price to retrace. Same here, point A to point B. You wait for price to retrace. Then usually price will usually give like 3 pushes in a day in one direction before a retracement happens. So in your notes, just keep this number 3 as your magic number. Usually, no matter what time frame you own, of course, if your market is trending, there is usually 3 visible pushes which the price is going to give you, like on average. So that's also something you just need to take note of. All right, so again, another illustration, we do have another Asian consolidation here. Then price takes out liquidity on this low here. So we take out the London lows. Then you can see price actually pushes. We create the low of the day. Then from there, we start breaking structures. We push up, retrace, we break a structure, we push up, we break Asian high as well, and we push up. So if you notice 1, 2, 3 before price starts to retrace as well. So 3 is like your default number of pushes, which usually happens, but the aim is usually to catch the first move because that's always the high probability trade. Okay, second example, another Asian session consolidation. Then price sort of continued with this push, which was going on until we started to retrace back. So mainly, you need to just understand what's going on. If you identify a break of market structure, remember you always want to try and trade in the direction of the break of market structure, in the direction of the trend. That sort of like helps you out. So here we see again London setting a low of the day, then price retracing back into the range. So the next session, which is one of my favorite sessions. If you trade or if you want to join me for live trading sessions, we usually host them during the New York session. So the New York session is characterized by being a retraction after the London session has made the low or high of the day. Sometimes the New York session can make the low or high of the day as well. So remember, it's not always the London session which is going to set the high or low of the day. Sometimes the New York session is going to set the high of the day. So delimitation, not the whole NY session needs attention. Focus on the first 2 to 3 hours at the beginning of the session from 2 p.m. until 4 p.m. UTC plus 2. And again, I'll agree with the author here. Personally, for me, I usually trade 2.5 hours from the opening of the New York session. That's like my sweet spot time to look for setup. So when we eventually go to the actual charts, I'll show you guys what I look for and how I mark my trading times as well. Right. So the New York Open, okay, there we go. So another illustration. We have a London session. You can see we had consolidation here. Then the London session opened, we set a high, a liquidity sweep as well. Then price starts to retrace. The New York session now opens. So that means if you are not trading the London session, as long as you understand price action and what's happening, Like for example, our Asian session consolidation, the London session setting the high of the day and actually doing a liquidity sweep. Um, New York session comes and the retracement happens as you are getting into your New York trading time. So as long as you understand what's going on here, it's now easy to take sales here or to take sales here because you already know, you understand how to approach the markets as long as you can identify a break in market structure or a break of structure on your charts. You always want to try and trade in the direction of the break, in the direction of the break. So the deal here is to just mark your session times. If price is retracing, you've already ran your fib, your confluences are in place, you already know what to anticipate. So the only thing you'll be waiting for is your trading time. Then you look for your entries or you look for confluences which line up with your system and you just execute your trades. Again, another example here, we've got a consolidation Asian range. Then the London Open, this is like ugly price action. I usually don't like trading price action like this, but for the sake of an illustration, just know that not each day is perfect. That's why we always try to take like 1 to 3 trades each week. So not every day is going to be a trading day. All right. So here the London set this low. We tried to push up, but we literally failed to break here. For me, I think this would actually qualify as a liquidity sweep, but not to confuse you guys, we're just going to focus like on this New York Open. So for the New York session, you see the New York session is the one which now came and we took out the London lows. Again, that's a liquidity sweep. So you always want to understand what your price is doing. We had a liquidity sweep here, which meant we could have looked for sales coming back to this low. We got a liquidity sweep here, which means we can now start looking for buys coming back to these highs. So that's just like different ways of approaching the markets. So here the New York session set the low of the day, excuse me, and the price expanded to the top side. Another example is when we had Asian consolidation. The London set the high, clean break of structure. Price dropped. New York session came and we got a retracement. So sometimes you might look for sales, right? So let's say you are looking at this as a break of structure and you're looking for price to sort of come back in this area so that you can get sales. So let me introduce you to something called points of interest or POI. As much as you mark your charts and say, okay, I've got a BMS here and price might retrace here and I might get a continuation. Yes, price can do that, but now you should be open to all the possibilities of what could potentially happen. As a trader, you should know that these sessions, they usually come with liquidity sweep. Each session can do liquidity sweeps of either the previous day or the previous session. If you need more information on liquidity, just scroll back above and go through our liquidity chapter whereby liquidity is explained. So you should be open also to trading both ways. Price can take out liquidity on the low side, sorry, on the high side. Initially, we took out the London highs. We created the initial high of the day. At some point, this was the high of the day, right? Price broke a structure, we dropped, we set the initial low of the day was here, then liquidity was taken just as we were about to start the New York Open, which means price is now trading back into the range after the liquidity sweep. So let's say you are looking for a sell. This becomes a point of interest. Let's say you ran a fib from this high to this low. Your retracement areas will line up with this broken zone, just an estimate. So this becomes point of interest number one. Then as a trader, you should also be open to using everything you've learned, which means you want to mark the high of the previous session as point of interest number two. If you understand support and resistance, supply and demand, all those things which you know about trading, you simply have to highlight all those areas as points of interest. So what now happens is your price is retracing, is you need to see where your price is giving you the best setup or the best confluence or the best things which you actually understand as a trader, or the best pattern or best candles. So if price does not react or give you a setup on your first point of interest, let's say you sell, you put your stop loss. That's also the importance of having a proper stop loss. And your price takes you out. Within that same session, you identify that, okay, my price is now coming to my second point of interest, which in this example is the London's lows. So, sorry, the London open and this London high. So what you want now is to see whether the price is going to respect that zone, or we're actually getting a breakout. So as a trader, you need an open mind. You need to be as fluid as the price is. Trade what the price is showing you. So as soon as you identify that it's actually a liquidity sweep, that's where you can now start to look for sales coming back to the last low, which the price would have set for you. So I hope this helps somebody. And when we get to the charts, it will actually get a little bit more clear. If you need assistance here, you can simply get in touch with the author. Like I said, I'll drop his Telegram group in the description, or you can join our paid mentorship where we explain all these things as well in greater detail. One thing about the author is you see there's no indicators on his charts. He trades clean charts, which is also one thing I respect. It's awesome. And you can also do the same, or you can use whatever you want to use just to make your trading journey a bit more easier. So the next thing which usually happens, or the next thing on our chapter, is accumulation, manipulation, and distribution, which is usually abbreviated as AMD. So accumulation, the accumulation of positions generally occurs during the Asian session. The accumulation is characterized by a consolidation Asian session, but it may not be the Asian session. That's one thing you need to know. The accumulation may not be the Asian session. It's usually the Asian session, but sometimes it might not happen in the Asian session. Then manipulation usually occurs at the opening of the London session. Sometimes it can also happen in the New York. It can be on the New York Open. This manipulation consists of taking the price to the opposite side of the true direction of the rest of the day. Sometimes, let me rather put it this way. The common statement is when you are trading, let me put it this way. Do not trade until you see either a stop hunt or a liquidity sweep. One of these two. Do not trade until you see a stop hunt or liquidity sweep. This statement, we only say it because we know usually before price moves in a certain direction, they will fake a move, or they will do a move which the author classifies as manipulation, just to trap people to go the other way when they know that the price for the day is going to go the other way. So we always say, if you cannot visually see a stop hunt or a liquidity sweep, it's always best to sit on your hands. Rather miss the trade and wait for the next best setup. The waiting part, I know that's the hardest part, but if you are able to wait for your setups, trust me, your trading journey will be much more profitable. You will minimize taking unnecessary losses, and you will protect your capital as well. So manipulation occurs at the opening of the London session. Sometimes it can happen in New York. This manipulation consists of taking the price to the opposite side of the true direction of the rest of the day. Then we go to the distribution. Distribution occurs when market makers liquidate or exit their positions. So AMD on the daily bar. So again, we come back to the candles. Like I said at the beginning of this chapter, as a trader, you need to understand the story which this one candle is showing you. So let's say this is a daily candlestick. You need to understand your directional bias. That's the first thing. So let's say you are in a bullish bias, right? You're looking for buys. This is your open price. That's where like your Asian session starts. So the Asian session is going to start with the normal consolidation. Then they are going to do a fake move to the bottom side, which is your manipulation. This is where the daily candlestick wick or the bottom wick is created during this manipulation. Then after that, price will actually then be distributed to the top side where it will create the high of the day, then most likely retrace a little and close, leaving this top wick. So as a day trader, you need to understand these candles. If you can understand this simple concept, which the author is speaking of right here, your trading becomes easy. Because if you identify this on your daily candle or on the daily bar, when you come to your smaller time frame, you know what you're looking for. You're looking for a visible consolidation. You're looking for a visible stop hunt. You're looking for a visible break of structure. Run your fib, identify a trend for the day. Then you're looking for that distribution to close the off the day, right? So this I would say is the important part. It looks like it's simple. It looks like something which is really not important, but this is the most important thing. You can identify this, go to a smaller time frame, and literally become profitable. You simply want to trade on days where you have volume also. So I'll show you that as well when we get to the charts. So just as I was explaining, we have a nice illustration by the author. This is bullish AMD and it's vice versa for a bearish move. So here you can see the author also showed how the candlestick would have been looking like right here. So we have our Asian session, we have the London session, then New York session probably somewhere in there where we have our distribution and the day closes. So as a trader, you are trying to identify consolidation. You're trying to identify the stop hunts, the liquidity sweeps, the manipulation, or whatever you call it. Remember, it's just different terminologies which people want to use, but we're simply referring to the same thing. Then soon as you can identify a BOS, the same structures you identify on your higher time frames, your 4 hours, your daily, same thing when you come to intraday, you're looking for a BMS or BOS, then you're looking for a failed swing here. You see price comes, fails to take out that low. We break a structure here, meaning if we miss this move, at least we should catch this move, right? So all you're looking to do is to catch one of those impulsive moves for you to actually get profitable. Here's another illustration. Consolidation during Asian, price drops down. So the dealer knows it's a bullish day. So they're going to trap people to continue with the sell, which was happening from the previous day. But as a trader who has gone through this book, your eyes have been open now. So you know after a consolidation, the next thing which is going to most likely happen is going to be a manipulation or a liquidity sweep or a stop hunt. So as soon as you see London extending the lows, be open to seeing price starting to break structures to the top side. And soon as you get any chance to get into that trade, just get into a buy because this is an example of AMD. So we'll try to look for these examples on the charts. And here you can see the author also drew a bar for this day. So we've got our open price, lower price, closing price, and highest price, which means this candle is simply looking like this. If you open on your daily chart, this will be your candle. This will be the candlestick body, and it's going to be bullish because our open price is on the bottom, our closing price is on the top. So that's a bullish candlestick with these two big wicks as well. All right. Then bearish AMD, simply the opposite. We won't waste much time speaking on this, but you can check your Asian range, consolidation. The dealer fakes out buyers to start buying. Then the price just melts all the way. Then it retraces back into the range. So this candlestick would be looking like this. And this is a bearish candle since our open price is on the top and our closing price is on the bottom. So this whole price action you see here, that's the wick which you see on your daily chart. The market makers or the banks, they buy or sell below and above the Asian session open price because of liquidity. So if you don't understand liquidity, it might be a little hard for you to understand what's going on. I would rather advise you to go back through the liquidity chapter. And if you still need help, feel free to get in touch with the author. The link to his Telegram channel will be in the description, or you can get in touch with me. I'll be more than happy to assist you. We do have a free community and a paid community as well as mentorship. So Asian session, open price below, sell stops liquidity, sell side liquidity, and above buy stops liquidity, BSL. We already spoke on this on the above chapters, so you can take time and go back to the chapters above and understand liquidity. So, all right, so chapter 5 is complete. So what's left for us to do right now is to jump back into the charts. Let's see what we have. So without even wasting much time, do we see or do you guys see that we do have a nice example here? Okay, let me just sort my, okay, there we go. We can see we've got a nice, this is GBP AUD M15 time frame. We have, for me, I just assume my Asian session to be just where my day starts. So I have my period separator. I have my indicator which highlights the previous day's high, the previous day's low. So if you want to use a naked chart, it's up to you. Just mark your areas of interest. So we do have our Asian session here. Then we have my London Open right here. So it is during this time, I have got a 3-hour window to look for a setup. So if I can identify that my Asian session was consolidating, my London session opens, we start by pushing up. Then after pushing up, where do I get my break of market structure? This is where we start to break levels when we have this move. So if I'm not taking my trades here, of course, we have ways to enter right here. I think it's further into the book. There's ways to get into this trade during my London session. But again, if you don't get anything clear here, if you wait for the BMS, like I said, you can still run your fib from here to get this entry, or you can run your fib from here to now get this entry, which now happens in the New York session. So these are just confluences, and as long as you understand the book and what the author said, it will be very easy for you to actually come up with a trade. So this was actually a quick example of accumulation, manipulation, and distribution, right? So this is your manipulation here, where the dealer is manipulating you to go the other way when they know that this is actually a bearish day. So I'll do a few examples on this clean chart. Then I'll do a few examples on my actual chart. This would be an example on liquidity, whereby price takes out the high of the previous day high. We went through all this already, and we have an order block here. London session starts. That is so. That's a sell. So as a trader, you just want to come to the charts with an open mind. Like I said, it's not every day where you're going to get AMD. On some days, you just get your normal trends with liquidity sweeps, and price will just like be pushing in one direction with no tens. On some days will be like this. This was actually our Asian session right here. So right here, this whole session is Asian session. Then the London session actually just starts by pushing up. It's just one day whereby price is in a strong uptrend. So these are all variations which come in the market. And if you are confused, I always advise you to get mentorship. It doesn't have to be from me. Just look for anyone who can explain these things the way you understand, and you can just apply it, practice, back test, forward test until you are able to identify these patterns. So visibly, you can see some of these patterns, they do not happen on a daily basis. Another example of accumulation during the Asian session, which is our consolidation. So consolidation and accumulation is the same thing. Then London session starts with this push up. It could have been a news event, which is the reason we don't trade news. News comes with what? With the manipulation. So we had our accumulation, manipulation, then price starts to get distributed as we get into the New York session to close the day right here. So the open price of the day was right here. The low price was right here. The highest price was right here. And the closing price was right here. So if you notice, this daily candle will be looking something like this. It's almost like a doji type of candle. And this open price and the closing price are almost on the same area, which means your daily candle is most likely going to be a doji. So for those who say seeing is believing, this was Monday, the 12th of May. Let's go to our daily chart. Let's see how that daily candle was looking like on Monday, the 12th of May. Okay, was I on 2024? I didn't check the year, but let's just cross-check. Monday, the 24th. So Monday, the 12th. I don't know where the 24th is coming from. So you can see there's the candle there. Just zooming in, zooming in. This is the candle, Monday, the 12th. So you can see our open price created the low. Let me actually write. Open price right here, low price of the day, high price of the day, closing price of the day, and we get this nice doji candle. So if you can understand the candlestick formation, I believe your trading is most likely going to be way, way more easier for you. So switching charts, going to my usual charts where you see the moving averages. This is GBP USD. We can actually pick a random pair, but here let's just check what we have on GU. So without even scrolling anywhere too far, okay, one thing I wanted to mention is on my charts, you see there's three squares. So let me use this example from yesterday. There's three shaded boxes. This is my London session. It's 3 hours where I look for a pattern or something familiar. So if I do not get a trade here, it means I have no setup during my London session. This is my New York session. I've got 2.5 hours of trading here. If I cannot get a setup during my NY session, that means I do not have a trade. I do not have a setup. Then just as a personal preference, so I trade the New York morning session, which is AM, and I also trade the New York session, the PM session, which is the afternoon session in New York. And this is my London session. So if I've got nothing here, sometimes the setup might happen during the New York PM session. I do not really mark my Asian session because I already know where it's located. I don't really need to mark my charts. Otherwise, there'll be many boxes which I don't really have to use. I only try to mark the areas or the boxes where I actually look for setups. So just to minimize, we are going to scroll back. So maybe let me speak on this, right? Again, we've got consolidation during the Asian. Then this is just an example where you don't have the AMD. There's no AMD here. There's other confluences, which means you now need to use other aspects of trading knowledge which you have to actually come up with a buy trade here. It's not every day where you get AMD. It usually happens like once or twice a week. on any given asset. This would be a good example where we've got AMD. So we've got our Asian session right here. We've got the London session which opens here, which means this manipulation started slightly below our London session. Then after that, price just started distributing to the downside, distributing to the downside. New York came and we simply had like what we call a continuation of the trend. So those are all the things you need to know as a trader. Some days will be ugly like this one. You get your Asian session, you get your manipulation, and sometimes there will be no follow through to the downside. So you just need to trade what your price will be showing you. Like I said, some days will be ugly, but as a trader, just to make your life easier, try to mark your London high, try to mark your London low. That will definitely help you out in the New York session, because either price will take out liquidity as you see here and you look for sales coming back to these lows, or price will actually break out and start pushing up and you might end up looking for buys just as a continuation trade. Same applies to the bottom side. When we get to this low, either we're going to get a liquidity sweep and price will come back into the range, or will actually break and drop. So those are all what we call variations which happen in the market. Another example, accumulation. London session brings the manipulation. New York session brings the continuation of this distribution, which actually started during London. So the London open, this was the push up, and price actually found the high. Then we started to drop, 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 drop. The whole day actually ended up dropping. So your open price will be here. Your closing price will be here. Your highest price will be here. And your lowest price will be here. This is the closing price, lowest price, highest price, open price, just like that. So it's now up to you to pick a session to trade. Once you pick your session, identify what your price is doing, then trade accordingly. If you're struggling to identify what price is doing, just try to see if you've got any type of trend and try to trade in the direction of the break of market structure, just as the author explained to us. So if you want to see a bar chart, there we go. The bar chart looks like this. Zoom in, zoom in, zoom in. Let's just go to the daily so that you can see these candles. All right, so from this, you can see, we'll just speak on yesterday's candle. You see this was the open price. This was the low price. This was the highest price. And this was the closing price. Just as simple as that. Just as simple as that. So if you come back to your candlesticks, you see there we've got a nice bullish candle. Open price, lowest price, closing price, highest price, just like that. So I hope this session was helpful. Please let me know in the comment section if this session was helpful to you guys. Let me know what key points you took from this session. Let me know if it's helping you at all or it's just a waste of time. But if you watched until the end, thank you so much for putting time into your trading. And I hope your trading journey works out the way you want it to. I hope you become the best trader you envision yourself to be. So I don't think I've got anything else here to add. Special shout out to Wade for giving us this opportunity to go through his book. The next chapter is chapter 6, whereby we're now going through the setups. Yeah, so let me not confuse you guys. We'll be going through chapter 6, powerful setups. So special shout out to WadeFX for giving us this opportunity. This is actually a good book and I would recommend it to anyone. So for anyone who wants to get in touch with Wade, the author of the book, this is his Twitter. You can just look him up, WadeFX Setups. And if you want to follow him on IG, it's Wade_FX_setups. And if you want to follow him on Telegram, this is his Telegram channel. And I'll also drop the link to his Telegram channel in the description. Then for those who want to join me, if you like the way I deliver, of course, you can still join my community and I'll try to help you out the best way I can. So if you watched until the end, like I said, thank you so much for joining. Thank you so much for putting effort and time into your journey. Enjoy the rest of your day. Good trading.